Cam Brar for Cam's Mortgage Minute on Friday, December 14th. Fine sunny day out there today. Hey, I thought I'd share with you some comments from the Bank of Canada Governor General Mark Carney and what he had to say at a recent function he was in Toronto. He basically warned Canadians about getting too confident as the housing market recovers. His words were that, as the housing sector moves towards a more sustainable path, he said that even though that housing starts are down and debt continues to fall, that folks should still be very cautious in how they're investing their money. They should be looking and doing their due diligence. He said we've seen starts coming down. We're still seeing some overbuilding still in condos, and we've been pretty clear about that. And we've also seen that the pace of household debt accumulation is slowing finally, as intended, from about the 10% level to about just over 4%. And he said we'll see if that persists, but that is a positive. We've seen some adjustments in the real estate market, which also are positive. But he was very adamant in warning consumers against being overzealous in spending. That could accelerate the household debt level spending again. And obviously, you know what, Christmas, a fine time for overspending. With homeowners and investors biting off more than they can chew, again, his caution was to everybody that if the housing prices look attractive, again, look at your budget, look at what you're doing. You got to make sure you can afford what you're getting into. And basically, he offered a caution to consumers, saying that historically, where policy measures have slowed spending, a period of reacceleration typically follows. Well, we all know that from 2008 when we had the subprime meltdown, there was that dip down, and then eventually the market came back stronger than ever, and folks were out spending like crazy. So he said we have not necessarily seen anything that would be consistent with that yet. But we just have to be vigilant about these aspects and adjust if necessary to that if there were clear signs of a reacceleration. So basically what Mr. Carney's saying is, look, if the market starts to recover a bit and we're starting to see housing sales starting to climb a bit again, we're going to watch to make sure that people aren't overspending, they're not accumulating record debt, that condo building, single-family residential building, all of that stuff doesn't start ramping up heavily again. And if it does, believe you him. I mean, he won't be him at the helm because, like I said to you before, he's moving on. But whoever's in charge of the Bank of Canada is probably going to intervene. That's the bottom line. The government looks like they're going to keep a pretty tight lid on things and are quite pleased with the sustainable path that the market's on right now. Again, beauty of all these things is we'll see how how things play into the new year and how the market goes. I've shared with you recently numbers across the country. There's areas that are up, areas that are down, and so yeah, it's true. It's more of an ebb and flow right now, and real estate is probably going to be holding that line for a while, and that's what all economists are predicting. If not, again, a slower or more steady decline still in values, but again, time will tell. Anyways, enjoy your weekend. It's sunny out here. Hopefully it is where you are, and I will see you on Monday.